Hi, welcome to your carrier update brought to you by PowerFleet. I'm Mike Vincent. He's Zach Strickland. What's going on, man?
I am. Tender volumes easing slightly higher to end the month of October, pushing up a little bit. Some seasonality involved here, some not so much seasonal.
Sure.
The decline was pretty strong from September into the middle part of October. And then we found a floor around the middle part of October. That's kind of seasonal. What's not so seasonal is that normally we kind of find our way out of that floor, out of that hole.
We normally do.
Relatively quickly in terms of the end of the month. But still, volumes, if you go back historically here, we're still sitting at all-time highs. This is still a lot of pressure on this freight market.
It would. Now, seasonally, we would expect this to continue this and then spike in about 3 weeks.
Yeah, right around Thanksgiving.
Which is not a volume based thing, right?
Well,
I guess the OTRI we would think.
Normally we see a little bit of a spike in the volume.
We would.
And the tender rejections really take off at that point.
That's exactly what I was
And that is not a volume thing, correct, Mike Vincent? That is a supply side contraction. As a lot of these drivers get bounded in certain areas, 500-mile radiuses, and I don't know if you've heard, but drivers are not necessarily as prevalent as they once were.
Like yesterday? Or?
Yeah, like in years past, it's harder to recruit them.
It is harder to recruit them, and that volume, that 500 to 700, that's not a favorite.
No.
Mileage.
It's not great. It's not great.
It's not great. That tweener mileage is not the most accepted.
So what that all means is that rejection rates, they're going to go up.
They're going to go up. And then you have capacity out of sync with where the volumes are because they're all going home, and then you got to recover from that, which is then the weeks between Thanksgiving and Christmas where it spikes again.
Unless you have a lot of drivers living out in LA, which I don't think is the case right now.
No.
A lot of
rates aren't quite high enough to afford that house.
Exactly. And domiciled locations typically are in the middle part of the country.
Yes.
And in the southern tier. So let's move into the spot rates quickly, see where they are. Largely horizontal. Reefer rates coming down. Truck stop top 100, but still $4.06 a mile. Extremely expensive. $3.43 for van, $3.47 for flatbed. I mean, just almost a straight line from Labor Day, at the end of Labor Day.
Yeah, really just moving sideways, man.
But they are still so high. I mean, maybe we have found somewhat of a ceiling here. We do expect those to kind of found another ceiling right here in a few weeks.
So. Yeah. We should see a rise, a pressure upward.
But not a lot of volatility right now. Let's look at the weighted rejection index tree map.
Let's do it.
See where things are undulating underneath the surface here of this stagnant aggregate market that we're looking at. Kansas City, weighted rejection index down to a negative 7.2. That is a very strong downward movement out of a market traditionally. Columbus, Ohio, your neck of the nape up there.
Yeah.
Also, very
strong
downward.
That's a strong downward, yeah.
So, I mean, anything you see over here, I mean, look at this. Ohio really taking some of the top slots of downward pressure on rates, or maybe just not as much upward pressure on rates, depending on where the rejection rates are at this point.
Yeah, they're dropping, right?
All of them kind of dropping. So the Midwest action, a little bit of oversupply situation, or more supply, I should say.
Yeah.
Not oversupply.
Well, there's a lot of inbound then. You would imagine there's a lot of inbound.
Tons of inbound,
especially with Columbus. It's rarely that the outbound dies out of Columbus. It's usually an influx of inbound freight that eases the capacity.
Exactly.
Right.
It's kind of like that. Well, it's also, you've seen it, DC centric.
Oh, it's a huge distribution. Yeah, that's the point. Yeah,
all
it's
over
massive.
the place, just like
absolutely.
Ontario.
Yeah.
Elizabeth, New Jersey, on the other side of the map here. Allentown, Pennsylvania, also showing up as increasing upward pressure.
Yeah.
You know what I'm saying? That's
two big outbound areas.
Week over week, tender rejection rates coming up. Let's look at the. Let's first off.
Boy, Denver's showing up over here.
Man. Denver's a different market nowadays. A lot of hit and miss. Let's look at the next chart. Kansas City.
Oh, yeah.
We saw the downward pressure here. They are bouncing. Tender volumes really hit a low point, the lowest non-holiday low over the last year or so, or last 6 months, I should say, looking at this chart. But tender volumes falling, rejection rates also fell pretty strongly. They've bounced since, so that's typically what we see. But the overriding trend is for this market to settle versus where it's been. And looking
looks like it took a step down from the spring, and now it's taken another fall step down, right?
Exactly. Very volatile, though. Extremely volatile market. So it wouldn't shock me to see this thing come back up. But note, the overriding trend is down for the long run. Let's look at the next chart here. which is going to be the Elizabeth, New Jersey market, which is the other direction of things. Although tender rejection rates for Elizabeth jumping up close to 20% once again. This is that upward direction over the last week to end the month of October. Tender volumes trending higher.
Yeah.
If you look at that long run trend, that's going to keep things more interesting out of Elizabeth. So carriers, I know it's not their favorite location to go into, but there's a lot of action here. Tender rejection rates lower than national average, but moving higher at the moment.
Yeah, moving up. Thank you so much for that, Zach. We'll catch up with you a little bit later in the hour.